Hey everyone, welcome back to the Market Chat. My name is Richard Moglen. Joining us today as our guest is the CEO of MC Stock Charts and one of the funniest Twitter fellows of mine, Marty Chargin. Marty, thanks so much for being here. Welcome to the show.
Hey, thanks for having me. I'm looking forward to it.
Awesome. So you're a very experienced veteran CANSLIM trader. Really looking forward to hearing about your process, your methods today. But to start things off, can you tell us a little bit about your background, how you got interested in this, and kind of your career and background as well?
Sure. Experience. That's a very nice way to say I'm an old man. I got into stocks as a kid. My dad was, he wanted to get his kids into a lot of different things, sports and music. He bought me a set of drums when I was a kid, and just that was a bad idea. But as far as stocks, he he got me into the stocks by buying not IBM, Standard Oil of Cal,
Hmm.
which was bought out by Chevron back in the early 60s. I think he bought it for me, like 65. And I would go to the newspaper. Of course, I'd look at the sports page first, right? And then the comics. And then I would get to the stocks and I'd look at the stock, and
Hmm.
Standard Oil of Cal would never move. It'd be up like 3/4 or
Right.
3/8 or a quarter. It never moved, right? It's like, yeah, this thing's not going anywhere. It's stuck at like $40. So I said, so he bought me a different stock. He bought me IBM because he thought I'd be more interested and it would move faster or whatever. So it was the same thing with IBM. It didn't really move a whole lot. In those days, we'd get like the San Francisco Chronicle,
Hmm.
the newspaper from San Francisco, and in the stock list, it would list all the stocks on the New York Stock Exchange. And the stocks that moved a lot they'd be in bold numbers, so you could see
Right.
them, they stick out like, you know, IBM up, $8 or whatever. So I wanted a stock with the bold numbers, as a
Of
boy.
course.
My dad, so he bought me Control Data, which was
Hmm.
later bought out by IBM. But that stock moved, it would be up like 6 1/4 and have the bold, the big black bold numbers on there. So that was it just dawned on me recently that I was a growth stock junkie before I even knew it.
Right.
I wanted the stock to move when I was a kid because it's more exciting, right?
Hmm.
Exciting. So my dad got me into stocks that way, and eventually, he'd passed away in 2000, and that IBM stock that he bought, he gave it to my mom, and my mom's like 97 now, and she still has the IBM stock. Of course, it split a bunch of times, right? And she gets the dividend check
Right.
every quarter. You never seen somebody so happy as when they get their dividend check in the mail. It's like, okay, free money. So it's great. Great American company. He bought it a long time ago, and she's still benefiting from that stock. So, but that's the way I got into stocks. My dad got me interested, when I was a kid. I didn't really start getting intense about it until the electronic brokerage firms, came out,
Right.
Schwab, TD Ameritrade, E-Trade. I think I was the first guy to sign up for E-Trade. I couldn't wait to get trading, back in the day. And then, of course, I turned into a day trader, and that
Just like everybody else. Yeah.
yeah, like everybody else. But the thing is, I look back on it, like they talk about the post analysis, right? Post analysis, here I am, I'm trading Qualcomm and Cisco and eBay, and I'm making these pennies per day, right? I'm happy with my $100 or $200. I look back after the year, it's like Qualcomm's up 2,500%. Happy with a couple $100. So and then it dawned on me that maybe I should be more of a little long-term investor, not such a day trader. So I
So
really hasn't done a lot of day trading since the dot
perfect.
bust. Yeah.
And how did you stumble upon kind of the can slim style of position trading, swing trading, that type of thing?
That's a good question. I can't even remember that far back. But in the 80s, I used to go to Barnes and Noble and buy the paper.
Hmm.
I probably bought the book first. I really don't know how I stumbled onto William O'Neill and the How to Make Money in Stocks. But I would go to Barnes and Noble and read the newspaper on Saturday, and they used to mark in big black bold corners, of the square. These are not stocks to buy, or they're at a buy point or whatever. So I'd go down and read the paper at Barnes and Noble. I want to say, I don't know, late 80s, early 90s. And yeah, just just ate it up, you know, from cover to cover, the newspaper. And then I bought the book. I got to shout out Bill O'Neill first,
Of
right?
course.
The first 100 pages of how to make money in stock gold, print them out, right? Blow them up, study them. Look at how many times you would have been shaken out because all of them are going to shake out at one point or another. But William O'Neill, I got to stop for a minute here because there's a lot of people who made a ton of money in the stock market and done, you know, well for themselves and well for others. But he's the one person who taught a system to people like me, the average guy, who could actually make money in stocks. I mean, it's not a perfect system. It has flaws. People poke holes in it, but this has helped me, you know, enhance my life and I have a better standard of living because of Bill O'Neill's teachings. So I definitely have to shout out Bill O'Neill. And as a teacher and a principal and educator myself, his teachings are fabulous. You know, the stories that he uses,
Yeah.
the analogies. I mean, he's just great teaching stories. So, you know, I can't say enough about Bill O'Neill. The guy is genius, and I'm forever indebted to him, and we all are really. We
No,
stand on the shoulders of his greatness, you know.
for sure. I 100% agree.
Yeah,
And outside of how to make money in stocks, the book you were just holding up,
yeah.
which 100%, if you haven't read it, go ahead and read it. But outside of that, what are a few titles that you also think have a lot of value and have helped you kind of develop your own process?
Well, I read a lot of technical analysis books, but you
Hmm.
know, I don't want to get into the technical analysis. I think the one thing that gets me into stocks where I dig in is One Up on Wall Street by Peter Lynch.
Hmm.
It gives you you know, to dig into the fundamentals, and also his style of, you know, he has some go-go stocks, you know, momentum stocks, and then he has some, you know, slow and pokey, what he calls stalwarts, you know, that you need to mix in. And I think that's pretty helpful for building a portfolio for longer term, you know. So yeah, that's one of my favorite books. And of course, every stock starts as an IPO. So
Right.
you got to have the
Life
life
cycle trade.
cycle trade. And I read this over and over again. So I want to shout out Eve
Yeah.
and Kathy, right? And Eric and Kurt for this book. I read it all the time. I got it dog-eared. Like I say, every stock started as an IPO, so you need to study the IPOs. On my website, I go through every day and put in a couple of IPO stocks and you know, just so people get trained to looking at them and how they're breaking out of bases. And sometimes they come back and they don't do what you expect them to, like most stocks. But as long as you get your eyes trained on them and look for stocks, and of course, you know, it's funny. Some stocks we know, like when Facebook came public, everybody's buying Facebook, right? And what happened? You know, it took
Pulls
a while.
back. Yeah.
Yeah. Same with Snap. You know, Snap were people from Silicon Valley, where I'm from, Silicon Valley. And that thing took 3 years before it actually broke out last October, I want to say. I think we'll take a
Right.
look at the chart later on. But then Google, as soon as it hit the ground running, you know, take off, you better buy it or you're going to miss out. So it's interesting. So yeah, I really thank Kathy for and Eve and Eric and Kurt for the book. Also, Kathy's a great teacher. I see her on IBD Live, and she's very patient and disciplined. I think that's one of the most important things that we can learn as investors and traders, to be patient and wait for your spot. And yeah, Kathy's a really good teacher, and she does it in not a condescending style. She's very wise, knows her content. So I really appreciate listening to her.
100%. Yeah. The life cycle trade. I think I have it right over there somewhere at the back of my bookshelf. Yeah. I love how they go through the different templates and everything. Yeah.
Yeah, yeah. They've see you could probably read it once and get it. I have comprehension issues, so I have to read it over and over and over again. So I've got it all dog-eared, and I keep referring back to it. It's a reference book. You know,
Exactly.
yeah.
And the best stock books are like that. You want to read them over and over again. I think
Yeah.
I've read How to Make Money in Stocks a few times over the past 1-2 years, and I get something new every single time. You get more experience, and then you interpret something differently that he says. That's how it is.
That's a great point. Yeah. Put it away for a while, come back and read it again. You get something else out of it.
Yeah. Um, and I want to ask you, within your stock investing process, what are some tools, whether it's a scanner, charting system, what do you use on a day-to-day basis to do what you do?
I use MarketSmith for my screening, and for screening, scanning stocks. On the weekends, I cast a wider net and look at, 500 to 1,000 stocks because I don't want to miss one. But we all know the same 150, 200 stocks that everybody else is looking at, right?
Yeah.
And we
Yeah.
know when their proper buy points and when they've, sold off below their, 50-day moving average. So, people kind of know the same stocks. So on the weekends, I look on MarketSmith for, cast a little wider net. And that's my go-to though, is MarketSmith. I use that pretty much exclusively. Yeah. I know there's a lot of different systems out there, and whatever you use, it works for you, great. I mean, whatever system works for you, great. MarketSmith has been helpful for me, so I use MarketSmith.
Perfect. And along the way, since you've been trading a long time, I'm sure you've made some mistakes, had a lot of lessons. What are a few key lessons that you think would be helpful to share to new traders out there?
Well, I do this today, overtrade. That's the biggest mistake everybody makes, is overtrading. I was, yeah, I mean, my biggest mistake though was Crocs, and that's why Mike Webster calls me Mr. Crocs. It's not because I like Crocs. I do like Crocs, and I wear Crocs. And everybody on Twitter sends me these gifts, and their family at the beach with Crocs on, which is great.
Right.
Keep sending those. I love it. But Mike calls me Mr. Crocs because it's my worst trading mistake ever in the stock market. And it was 2007, and as I look back at it, and I was watching Jim Ropel, and he said the same thing, that he missed it too. But there were signs that it was going to crack. There was an earnings report on Halloween 2007, and I was loaded up on it. I'd made a bunch of money on it, and I was only in 2 stocks at the time: Dry Ships and CROX. And you're supposed to concentrate, right? And they were both doing really well. And I was conversing with people on IBD forums at the time. I think Joe Williams was on there, who's another CANSLIM guy, and we were conversing back and forth. And then we were holding through earnings, and I had 50% of my portfolio in CROX at the time, and the earnings bombed, and right away I just posted there, we're done. This is done. And it went down. I don't know. I didn't even look at it. It was probably like 27%. In one afternoon. So I sold in after hours because I knew it was done, but it was still down 20% already. And the next day, 2 days, the next couple of weeks, it just kept selling off.
Do you want to bring it up, actually, Marty?
I could bring CROX up. Can you see that, Richard?
Yep. So can you talk us through the chart, the uptrend as well as the drop?
Well, I mean, I had loaded the boat on this thing way back here in the 20s, and it formed a base here. But it was just ripping, as you can see, all summer long. And, you get in that mindset, well, this thing's going to the moon.
Right.
Not going to stop. CROX is invincible. But, right before this major sell-off here on Halloween afternoon and then November 1st, it, pulled back to the 50 there and kind of stalled a little bit. And then it popped back up right before earnings. And actually the day of earnings, it really excelled. You can see it closed at the high that day.
Right.
As soon as they announced that print, I mean, it was ugly. 36% in one day. That beats Fastly.
Yeah, it does. Yeah, for sure.
Fastly's got nothing on CROX. So that was my big mistake, being over-concentrated, being overconfident, not taking profits along the way,
Right.
So I made a ton of mistakes there. Position sizing, like right now, my position sizing is usually 10 stocks at 10%, or, 8 stocks at 12.5%, and I'm never fully invested, just because of my age and my position in life. But, if I was younger, I'd be fully positioned. But yeah, that was a big mistake. So that's why Mike calls me Mr. Crocs.
Perfect.
Yeah.
And for people who don't know you from Twitter, what's kind of your time frame for trading, investing, and what's kind of the average gain, average loss you shoot for, and holding periods as well?
Yeah. See, I do both. I have a retirement account where I just buy long-term stuff like Target and
Right.
Nvidia, and then I keep those stocks in there. I even have Bristol Myers in there, which is, it's in a 22-year base, Bristol Myers. We could bring that up. It'll break out one of these years. But I like to trade.
Hmm.
So I'm a position trader, but I like to swing trade. I don't like to day trade anymore. I can't do that. It's bad for my heart, bad for my stress levels. It's too much thinking, involved.
Yeah.
I know it's great, to scalp 10% a day, and it's fantastic. And if you're doing that, great, good for you. I just can't do it anymore.
Hmm.
Uh, so I like to swing trade. I like to buy breakouts, and if it goes up like 10%, I'll take a profit there and move on to the next trade. That's great.
Hmm.
I know you've had guests on before that talk about the math of doing a 10% trade versus 5% losses. You don't have to be a crazy great trader to win with that kind of mathematics on your side.
Right.
So I like to take 10%, 20% is even better. But I I don't like to marry a stock and watch it come back. I hate giving back the gains. That's in the O'Neill book, right? The turkey trap, right?
Yep. Yep.
Woman set the turkey trap. The turkeys walked in. He didn't close the trap. One walked out. The kid says, "You're gonna close the trap now?" He says, "No, I'm waiting for that one to come back in." And three more walk out. Pretty soon you don't have any turkeys, right?
Right. Right.
So yeah, I like to have a couple turkeys. So I take profits, and I don't care. I know a lot of people, lament that after they sell, the stock went up another 10, 20%. I don't care.
Hmm.
Let it go. I mean, I made what I need out of it. So, that's another thing. In having a business and working with clients, I understand that everybody's got a different situation in life and every position in life, and they want something different out of the market.
Right.
So that's what I want out of the market, those scalps and some longer term positions.
Perfect.
Yeah.
And in terms of managing your emotions and also overall mindset, what do you think it's kind of important for newer traders to realize? And I like your hat. It says never give up. I think that's a great theme. Very William O'Neill as well, very optimistic. So yeah, what are your thoughts on mindset and staying positive throughout it all?
Yeah, if you have a couple bad trades go against you, it can work on you mentally, and I know you've had guests on to talk about backing off, back off. If the stocks are not working for you, back off your trading, smaller size positions, try to hit a couple singles and get back in the groove. But and also on the flip side, if things are going great, it's like things are going too great. I don't know. I've just been around too long. It's like this is too good. I start lightening up. I'm not greedy at all. So I use rules though to buy
Hmm.
and sell. Like I'll go out on the golf course. I'll be golfing, and Market Smith will send me like it did today for Roku. Roku went back up through 400, right?
Hmm.
And so I knew that was around the 50-day moving average because I'd programmed it. And so, I took a little nibble off of Roku just because, it's being supported by institutions at that level. So I use rules to buy. Typically, I like to buy, out of a cup with a handle or some type of double bottom base. But
Right.
I'll buy on those pullbacks to moving averages. Sometimes that's the only time a stock will let you in. So I use rules to buy, rules, and every stock that I buy, I've studied fundamentally. You buy with the fundamentals and the technicals, and you sell with the technicals. I think selling is much harder than buying.
Yeah, I agree.
Yeah, yeah. So yeah, I try to use rules to keep the emotions out of it. Sometimes it's hard when the stock goes against me. I just have to go out and hit some golf balls or something.
Perfect.
Yeah.
And how much of your process is fundamental versus technical, basically?
Yeah, I like to and know what they're doing. And fortunately, I lived in Silicon Valley all my life, and I know people at all these companies. The AMDs and Netflix, and I've seen them grow. Facebook. I was just in Silicon Valley last week and talking to a friend of mine who works at Facebook, and all the things that they're doing there to
Right.
create revenue, untapped revenue at Facebook. It's unbelievable. The Oculus. He's a hardware engineer for Oculus. I mean
Very cool. Super
yeah,
cool.
they've got untapped demographics, at Facebook. So if you haven't gotten into Facebook and you think you missed the boat, I think it still has some room to run. They have they have WhatsApp and Messenger and Instagram. It's not just Facebook. They have a ton of revenue streams that they're going to tap into in the next few years. So yeah, digging into the companies gives me conviction, to hang on a little longer. AMD is another one. Lisa Su. Have you ever heard Lisa Su talk? I mean,
Yeah,
she's brilliant.
for
Uh,
sure.
she's got so much content flowing from her brain. You never hear her stutter. You know, it's always, she can't fire it out fast enough. She's got that, she's a brilliant person, and she's a great orator. I love listening to her talk. Great public speaker, and she knows the content. I really enjoyed her on the last earnings call where she took a shot at Intel saying we're going to fight for every socket. I love that. You know, it's like it's competitive. You know, they're competitive people. Jensen's the same way. I don't know if I told you about my neighbor who worked at NVIDIA. He worked there for a while, and then in 2014 they came up with their 5-point. They came up with a 5-point process for making. They changed over the company. You know, the artificial intelligence and the self-driving automation and the data centers, the gaming. So Jensen was he's really a taskmaster. And my neighbor would complain like, Jensen's making us work overtime, and I got to work weekends, and I got all these projects, and I'm just overworked. And I'm thinking to myself as an investor, like, I'm going to invest in NVIDIA, right? While you're complaining, I'm going, that's the kind of guy I want to invest in, you know, CEOs like that, you know, Lisa Su and Jensen. And by the way, they're related, right? Lisa is the niece of Jensen. So it's like a family feud going on there. And if you, later on, we'll look at the comparison charts and see how those two stocks have just battled each other the whole way. Anyway, AMD is kind of near and dear to my heart anyway, because I know people there, but from from 4 to 40, $4 to $40, 2016 to 2019, it was a 10 bagger. And I lost money on it trying to trade it. So that just goes to show you trading is really hard. So at $40, I just decided to buy it and put it in my retirement account. I don't even look at it again. I trade it in a trading account, but I'm just putting that one away because I believe in the company. I have conviction. I've done my homework on them. I think they're going to do well going forward. So that's how I buy stocks. I need to know a lot about the company because I won't have conviction. Like an oil stock or a shipping stock or some of these steel stocks. I mean, it's great. If you're making money on those, great. But you can't, it's hard to get a grasp on them.
Right.
It's hard to get a grasp on those commodity plays. So I haven't done as well with those types of stocks as I have with the tech stocks. You know, so I'm sure I'm not alone in that. They're difficult for me to trade.
And it sounds like the CEO is very important to you, really believing in that person, that leadership.
Yeah, leadership matters. I was a leader in my community. I was a principal for 20 years, and it's like you set the tone. It's a culture revolves around you. You know, if you want to be a pouty person or a negative person, your whole community is going to have bad morale. And if you are upbeat, positive, and looking at the bright side of things and anything is possible type person, never give up. I mean, your people, they pick up on that, and it makes it a better community. So leadership matters, totally matters. Yeah.
And getting into your stock selection a little bit, how do you find these stocks that you could potentially dive deeper into and look at the fundamentals? Are you running screens in MarketSmith? Are you picking them up on Twitter? What's kind of your process like?
I just go to Twitter, and whoever says, this one's going to the moon, I buy it, right?
Right.
No, I screen on MarketSmith. Earnings are important to me. So I want to have screens, 40%, and I always hear Bill's voice in the back of my head because I've heard him interviewed so many times. You want those stocks with those quarterly and annual earnings growth, 30, 40%. So I screen for that. And it's important to me. But, as a company like C Limited, SE, I mean, it's a phenomenal company, another great leader, right? Forrest Lee.
Yeah.
And, but it doesn't have earnings, it's like Amazon was back in the day, so I bought it and I own it, but I don't have as much conviction in other stocks because it doesn't have those earnings yet. So every time I screen for earnings, it doesn't come up, but it's a phenomenal company, and I'm sure people are long in SE, and I'm sure it's going to do well over time.
Perfect. And once you found an idea and you've got conviction in it, what type of setups are you looking for? And feel free, if you've got any examples, to bring that up as well. And what makes you ultimately buy a position?
Well, since I'm here on CROX, you can see this CROX screen here?
Yep, I can see it.
Okay. You guys are going to think CROX is the only stock I own.
This is amazing stock. If you go to a monthly chart, this has had 3 runs now that are model book stock runs. It's incredible, amazing.
Yeah, what's the if a stock goes down more than 40%, its chances of reaching new highs are pretty limited, right? The risk reward there is not in your favor.
This is the exception, I guess. Yeah, for sure.
Yeah, yeah, I've been in it for a while, and I almost got out of it one time
Hmm.
when it pulled back below its 50, right here around 73, and then. And, I remember Irusha and Mike Webster was talking about taking a step back. I
Hmm.
took a step back and look at the weekly chart, and it wasn't damaged, so I held on to it there. But I originally bought it right here at the gap at 45,
Hmm.
um, back in October. I guess their earnings report. Some people call these stair steppers, right? Where they
Hmm.
go up on earnings and they kind of flatten out. They go up on earnings again. They flatten out. They go up on earnings again. But I have conviction in the stock. And the CEO is phenomenal, and he's got a great team there. They've done a great job marketing their products,
Hmm.
on TikTok, and they've got the young crowd involved. If you listen to the earning report or check their data, like the kids are brand loyal these days, right? I mean, the little
Right.
kids who get into Crocs because moms put Crocs on them, they're easy, right? They slip on. But as they get older, teenagers, they're brand loyal and they turn into, they're selling the sandals now, the flip flops. So
Hmm.
that's turning into like their biggest seller. So I think it still has some runway. I mean, it's had a phenomenal run. I mean, you certainly can't buy it here. My last little ad was after the earnings in July, but um, you know, it's pretty dangerous to be buying here. You buy it here and it pulls back 10%, you're going to get shaken out, right?
Right.
Yeah, but it's been a phenomenal stock for me. So, and I still hold it. Um, yeah, if I go to that weekly chart, Richard, it was this one day right here. Right here, right before it was a flat base. Yeah, it closed below,
Hmm.
closed below um, the 10 week, and then it was just one day, and then it took off. So yeah,
And
yeah.
when you bring up a stock in Market Smith, walk me through your thought process. What are you looking at first? What fundamental metrics are you looking for? What are you looking for in terms of price and volume too?
Oh yeah, see that's another thing. And I at MC Stock Charts, I have my clients. They rate their stocks, right? You got to rate them all the time, right? And
Hmm.
everybody has a different rating system. What criteria is important to you to own a stock? For me, it's earnings. I need to have a little earnings and sales growth. That's really important. But for
Hmm.
some people, it's free cash flow or return on equity, or they just look at that RS line. The RS line's going up. I want that thing, right?
Yep.
And that the RS line is important because it shows the direction of the stock, not the rating number, but the line itself.
Yeah.
Um, so yeah, there's like when let's go to Generac. Generac was a stock. You can see this, right?
Yep.
Yeah, it formed a nice consolidation period here. It was a stage 4 base, but I still liked it. We bought the breakout here,
Hmm.
a little early entry, and then it ran up. Like I said, at 400, it was like 10%. And I was telling my clients, that's a good place. Take 10% and move on, right?
Hmm.
I was going to hold, but I think some of them sold. Then it ran up like 440 or 450. I mean, that's a beautiful gain. Me, like a dummy, I held on and waited for it to break down here, and then I sold it like at 410. So, oh well, that happens, right? I
Hmm.
think what it'll do now is just kind of form a base, and it still has great growth numbers, and it still has great products, and they're into solar. So, but that's kind of my style right there, buying the before the breakout, taking 10-20%, moving on. Same thing with AMD, right?
Hmm.
Yeah, it was right here, the 8920, right?
Hmm.
Early entry there. 8920 early entry. I bought it
Hmm.
early, like right here, then got shaken out when it came back here. Had to rebuy it as it came through, and I always buy a little more as it comes back through. And when it rallied through, it just took off after that earnings report. I was surprised that it went as it did, and obviously now we know that the Reddit people were in there, right?
Yeah.
And kind of pumping it up. The volume is insane. I mean, even a second grader knows that hey, there's a lot of blue bars there. That stock was a good stock. But yeah, I like to buy early, right? Out of a base, let it run up, take 10 or 20% profit. That's my trading style. And there's all sorts of different patterns, inverted head and shoulders, double bottoms. I mean, bull wedges, but yeah, those are two of the recent trades that I made. I don't trade a whole lot.
Yeah.
I don't trade every day. I'm not that type of trader. If I see an opportunity, I'll buy. If not, I won't. You might see 3 or 4 in a day, and you might not see any for a whole week. It just
Hmm.
depends. You know how that goes. Yeah.
And for this one, you said it was in your retirement account. Did you also buy it in your trading account?
Yeah, I
This one?
bought I bought this one way back in the day when
Yeah.
I messed this thing up so bad. Yeah, it ran all the way from what? Yeah, 4 to 40, and I messed it up. And I just said the people who trade with me, it's like you can't trade this stock. So I'm just going to buy it here at 40 in a retirement account. But I do trade it. It's one of my favorite stocks, AMD and Nvidia.
Yeah.
And if you got a minute, I can go to the
Yeah. Comparison. Yeah. Bring them up.
compare these two. Like right now, what is that? A 1-year chart?
Hmm.
Well, Nvidia looks like it's destroying it, right? And actually, if you throw the SPY in there, AMD was underperforming the SPY, for a year, and it just got back to even. These two have been battling forever. AMD's done a great job. Of course, it started from a lower point, but they just kind of go back and forth. So I find those charts really interesting, Richard. And
Hmm.
the clients that didn't see stock charts, that they like when I post those because it shows history. Of course, you would have held the whole time like a dummy. I couldn't do it. 1,600% for AMD and 1,300% for Nvidia. You
Right.
can just buy it and hold it in your retirement account, but I can't do that. So I got to trade in and out. So that's why I bought it in my retirement account. I don't have to think about it. It's just in there. I don't even look at it. I don't even open that account. So yeah,
And on the earnings gap up, which is where you bought the Crocs,
yeah.
um, what are you looking for on that day to enter a position? Do you buy the first 30 minutes of that earnings gap up? Do you look at an intraday chart? How do you basically manage a earnings gap up like that? Because it can
Well,
be very scary for new traders
yeah,
to buy on
yeah.
that type of
No,
day.
no, I understand that. I'll buy in after hours if it's just going crazy like Chipotle here.
Yeah.
They reported, what day was that? The end of July. What day was that, Richard? Help me out here. July
Let me go.
27th. Let me get this here. July 27th. Doesn't matter the day.
Yeah, the
Um,
21st, 21st.
there it is, 21st. So they reported the day before the 20th, and it was ripping in after hours.
Right.
And I was watching the stock, because of the chart pattern, right? And it was just ripping. The volume was like 3 or 4 times, normal run rate. So I just bought a little bit, and after hours, and bought it the next day.
Hmm.
Just kind of held it. That's not something that I would recommend to people who are,
New at
trying
this. Yeah.
to. Yeah,
Yeah.
but it's one of my favorites. I wanted something in retail besides Crocs, right?
Hmm.
You get a little tech heavy, and then when they sell off, they all go down at the same time, right? So I like a
Yeah.
little bit of mixture. Yeah, I like some retail and some other things, just not just the software stuff.
And we've seen a bunch of really nice breakouts happen the past few weeks. I mean, for a while here, breakouts weren't working, but now it seems like there's a little bit of a change in tune, like DDOG today.
Yeah,
Yeah.
fantastic. Yeah, I didn't buy it. I'm a dummy. Yeah, there's been Young Brands, they busted out. Auto Nation's hanging in there. There's been a lot of breakouts that are working. They weren't working for a while, so we had to buy the reversals, right? As they were,
Right.
you know, breaking down, then coming back through moving average. You bought the reversals, so that's a little different type of strategy. But now the breakouts are working. I definitely prefer that type of market.
Yeah.
When the breakouts, AMD and CROX, there's a lot of them that have been breaking out recently.
And
And
talk me. Yeah, go ahead.
no, it's a much friendlier environment for people who trade
Right.
like us,
Right.
the swing trade. It was tough there for a while. I mean, it was a tough market environment. It seems to be getting a little better, but we'll see.
Yeah. And I don't know if you have an example, but could you talk me through how you buy off a moving average? Because I always get questions. When do you buy? Do you buy on weakness? Do you buy as it's confirming up off the moving average? How do you handle that, Marty?
Some stocks don't let you in, great
Yeah,
stuff.
FT&T. Yeah.
It's not letting you in, right? And last week I wanted to buy it, had earnings, and it dipped down. I thought it was going to come down to the 50. I had an alert set, but it didn't go off. The next day it's just off the races, Went from 250 to 300 in a couple sessions. So yeah, I like to buy. Like I told you, I think I told you about Roku today, right? Off the
Yep.
50. You know, it seems that the institutions are supporting it there. And if it goes down 5%, I'll sell it and get out of it. If it wants to go down to the 200, that's fine as well. It's just, I think institutions, it's a good company, great products, accelerated sales growth. I mean, what do you want? Triple digit earnings growth. I mean, the CEO poured a little water on the forward guidance, but if you look at the numbers, I mean, this has got those CANSLIM numbers. So I think the institutions will support it here at the 50, and that's why I like to buy on a pullback. Obviously, this thing's kind of sloppy
Mm-hmm.
and messy, but I think institutions will support it there, and we'll see. If not, then I'll sell it. If so, then I might add as it goes through the other moving averages. But
Yeah,
once,
and intraday, how do you decide when to buy on that pullback? Basically, do you buy as it's coming back into the 50, or does it have to make a slight move up? Maybe you look at an intraday chart to see some strength before you press
yeah,
the buy
yeah,
order.
yeah. Good question, Richard. You've done this a time or two before, haven't you?
Yeah, I have for sure.
Uh, yeah, I like to see a bounce. I don't like
Hmm.
to anticipate a bounce. I think it was Charles Harris who's fantastic at buying pullbacks, right?
Right, right.
He's much better than me, but I like to see a bounce. I like to see that support before I make a buy. And like I say, if it fails, it fails. I'll get rid of it. I'll sell it easily enough. It's just a stock. But I want to see that bounce of support. It did today. It came down, like 380. I mean, I know people were talking about that anchored VWAP at 379 or something. Came back through. The 400, I believe, was the 50.
Hmm.
$400.10. And then it came up. It climbed up to like 410 or something. So I think they're going to support it, and it's just a guess. I don't know.
Hmm.
Maybe they won't, but I like the company. I like the earnings and sales numbers, so I'm going to stick with it for now.
And on a buy like this, you said a 5% stop loss is usually what you set.
Yeah.
Um, yeah, talk me through your stop loss management process. Are you using the same 5% for standard breakouts as pullbacks, or is your strategy a little bit different there?
Um, for coaching people, I would say 5% from a proper buy point. If you're buying responsibly, quality stocks, 5% is good. If it works against you, just get out, right?
Hmm.
Um, but I don't typically use stop losses. For
Hmm.
me, um, I do an occasion, but I've learned that stop losses have stopped me from owning great stocks. So I can always buy them back. It's up to the individual stock, and the individual person. I use them occasionally. I don't use them all the time. Sometimes I do, sometimes I don't. If I have more conviction in a stock, I'm probably not going to use a stop loss. If I'm buying something I don't know a lot about, I'll probably use it and just get the heck out of there if it works against me. Yeah.
So how are you managing risk if you're not setting a stop loss? Do you have alerts set to that notify you if it's dropping below a certain level?
Yeah, I use Market Smith alert system, and it's pretty. The other day it was going off like crazy. I think it was yesterday, because all the stocks were going through certain
Yeah, certain
periods.
levels.
Yeah, yeah. I use an alert system, and sometimes you got to let your stocks wiggle around a little bit, right? I mean, and it's kind of a loose 5 to 7%. You don't want to lose any more than that. That's for sure. I
Hmm.
usually do 5. I use a stop loss. It's usually 5. That's enough pain for me, that the trade's working against me. So yeah, that's pretty much my standard threshold. But I don't use them all the time, because then I usually have to buy the stock back. It does, it reverses, and then you got to buy it back. But I have those stocks that I like, and if they start bouncing back, I will buy them, just like Roku today.
Right.
It's a stock that I like, and so I bought it back on the 50 as it bounced a little bit.
And so far, you haven't mentioned fund sponsorship, fund ownership when looking at the fundamentals. Is that something you look at in MarketSmith? Do you take that into account?
Yeah, definitely. But you know, they MarketSmith has their own certain funds that they like. You know, the growth funds and everything. And for
Yep.
some, you know, for some stocks, like if you go through those shippers and oil stocks, you won't find any. They'll have a lot of funds in them, but they're not going to be these funds, right?
Yeah.
The IBD Mutual Fund Index. So you know, um, yeah, what was it? Denbury, good stock. Yeah, it doesn't have, what was it, got 325 funds, but no funds here. It's been
Right.
a good,
But nice growth overall, though, from 190 to 325 in just four
yeah,
quarters. Pretty good.
yeah. I mean, I think that's one of the leaders if you're going to buy those oil and gas exploration stocks. But I mean, it's a little deceptive, you know, because
Yeah.
it's catered to, you know, our growth stocks. You mentioned Datadog, right? That's why
Yep.
you got it on. What was the other one? Hubs?
Yeah.
Hubs,
Hubs.
my goodness. HubSpot?
And look at Dexcom. Dexcom, I think, has all of them or something crazy like that. Yeah. Look at
Yeah.
that.
Are there any funds left? What was one I was looking at the other day? Facebook, yeah.
Yeah.
Was it Fidelity? Danoff's got 10%, right? I mean, you think they like Facebook over there, Fidelity? Yeah.
Just a bit. Just a bit.
Yeah, no, that's one of the criteria when I rate my stocks is, you know, institutional support. It's the I in CANSLIM, right? I mean, you got to have the institutional support because I think that's what happened to Roku today. It just got some institutional support at the 50. And yeah, so yeah, that's one of my criteria besides earnings and sales and, you know, the RS line. And yeah.
And could you walk me through actually your process of rating a stock? Just talking about all the different criteria, because I remember watching a great podcast with Mike Webster and Arusha where they were talking about rating your stocks so you know what to sell during a correction. But as you said, everybody's got their own process. So what's kind of yours?
Yeah. Yeah. When I rate a stock, on my website, I have a conviction list of 20 stocks.
Hmm.
And I rate them every weekend, and sometimes they get kicked out. You know, if a stock trades below the 50, you know, that's probably one of the criteria is that, you know, it's weakening, the RS is weakening, and maybe we don't want to own it for a while. But
Hmm.
definitely the earnings, you know, quarterly earnings and annual earnings and the
Hmm.
sales growth, that's important to me. Um, Leadership, is it a leader or a laggard? And it's a group. You know, there's some stocks breaking out, and then I looked at Applied Materials, which was a leader, and now it's just kind of lagging. I don't know if you can see that chart, Richard, but
Hmm.
you know, it's not breaking out like some of the others in the group. So, but it had a good run. It was up 165 to 146 in 6 months. So it's just resting now. But that's one of the things that I look at. Performance, obviously, right?
Yeah.
Performance. I was a coach of a team. I coached a lot of teams, and if you weren't performing, you sat on the bench, and we put somebody else in the game. It's the same way with stocks. If you're not performing, you know, we put you on the sidelines and put somebody else in who is performing. So performance is a big deal. Um, you know, I do look at some of the free cash flow and the return on equity stuff because, you know, the balance sheet's important if you're going to own something and have conviction in it longer term. You know, that's some of my criteria. You know,
Perfect.
performance, sales, earnings, yeah. Institutional support, yeah.
And once you have a position, how do you deal with overall market corrections? What would make you ultimately sell, I guess, is my question. If you don't just take profits at that 10% and work into another stock.
How do I deal with it? I just start crying. I get in the fetal position and cry. I cannot stand drawdowns, but it's part of the deal. You know,
Yeah.
I I went to cash last year, February 20th, right before the you know, the market crash, right?
Yep.
And people ask me, why'd you do that?
Do you
Because
want to bring it up real quick?
but it's just the spy at the
Yeah, just the index. Yeah.
yeah. Yeah, that was nasty right here, huh? I can go to
Yeah.
the daily chart, you can see it better, just day after day of us getting torched.
Yeah, just super volatile action too. It was up and down 10%, down 8%. Yeah, there you go.
Yeah. So anyway, we'd had a big long run up to this, right?
Mm-hmm.
People were. I was listening to Ropel and some people talking like, I don't want to give back my gains. I've had a great run, and so I had that in my head, so maybe I should unload some and lighten up. But one day I was up in the morning. I had my account up, and I was up like 3%. I was having a great day, 3-4%. And I had to walk my dog, and I walked my dog for like a half hour. I just went to the park and back. Right, I come back and I was down like 4%. On what's going on? And I conversed with some of my buddies, and they thought maybe some whale was getting out and selling. So I just got out and sold everything just to see what would happen. And then it was just by chance, just by luck. I mean,
Yeah.
nothing. I don't have any magic tricks anymore, magic formula. It was just luck. And then this thing happened, and I didn't buy a stock for like 6 weeks, not till that April 6th. I believe it was April 6th followed through. I
Mm-hmm.
mean, it was just, I was I was shell shocked. You wake up every morning, limit down, So, yeah. But that was like the Cuban Missile Crisis that we just talked about, right?
Yep.
The velocity of the South. Did we do that on this? Or was that
No, go ahead and bring up that precedent, because that's what
yeah,
you're using, right?
yeah, that's my thesis, man. You got to have a thesis, right?
There you go.
If you're a teacher, you got to have a thesis, right? Anyway, so I believe that this is pretty similar. On the weekends, I have nothing to do, right? I can't golf on the weekends because it's too crowded. So I sit around and chart all day. And I look at historical charts. And this is my thesis for this time period, because in 62, it was John Kennedy, our president, and the Cuban Missile Crisis with Cuba. And
Right.
Castro, nobody knew, what was going to happen. Is the world going to come to an end? We're going to blow each other up. So that was like the fear, it's fear and greed. It's all fear and greed, right? That was the fear back then, the fear of the unknown, similar to the coronavirus fear. We didn't know exactly what damage this thing was going to do. I
Right.
don't know if we still do, but so that's that type of velocity of sell-off is similar. Obviously, we trade a lot faster now, and information travels so much faster now. But that's similar sell-off in 62. Then it repaired itself a little bit, and you can see this run up here at 63, 64, 65. That's a pretty nice run.
Right.
So this is where I believe we are now, and we still have 12 to 24 months run of good. I wouldn't say bull market, an uptrend. We have a nice uptrend, and if it works out, I'll take credit for it. And if it fails, I'll forget all about it, right?
There you go.
That's the way it works. But you have to have a thesis, and so that's my thesis. That gives me a little more conviction, that chart. And I'm always looking for other charts too. And I talk with other traders, and they think I'm onto something here, but maybe I'm not. Maybe I'm just a crazy kook on Twitter.
No, it makes sense. And look at the powerful trend. There were a lot of weeks where it was just riding that 10-week higher
Yeah,
to
yeah,
its
yeah.
all-time highs.
Yeah, it
For
came
sure.
back to the 200 once or twice, right? And, that's a long stretch of time there. It's like 3 years, right? Yeah,
Right.
yeah. So anyway, I like to stay positive. I think we're in an uptrend. I think we're going to make a lot of money in Q4, especially. We've had kind of a rough time here in July and August, and I think better times are ahead. We're going to make a lot of money coming down in Q4, October, November.
Perfect. That's what I like to hear, Marty.
Yeah,
For
yeah.
sure.
Yeah, why not? I mean, the quarterly earnings have been great,
Yeah. Yeah.
pretty harsh. If you have a growth stock and your growth slows a little bit, you feel the pain, like we saw with, FSLY. Obviously, they have decelerating.
Yeah.
Um,
Yeah. Do you want to bring up that chart fastly? And we
well,
can also talk
yeah,
about
I brought
pins
it
and
up
fiber.
yesterday. Yeah, yeah. We were going to meet with you, so I have FSLY here.
Yep.
And then again today, it did the same thing, right?
Right.
So this is a stock that I owned, and we had great success in it, right? From the
Yeah.
20s, it was ripping. It's a great stock, and I don't want to pick on Fast and those people who own it. God bless you, but it has shown decelerating sales growth. 42, 40, 35, 40. Somebody's taking market share from them, right?
Mm-hmm.
Or they're not executing. And this 27% drawdown here was when it was time to go
Yeah.
for me, because
I got stopped out on that day right at the
yeah,
open. I remember. Yeah.
So, that was and then it retraced 50%, even more. So
Yeah.
that's when I knew, man, I better not get back into this thing, even though it did ride back up.
Hmm.
Did it on kind of lighter volume here.
Yeah. So
Um,
for people who don't know, what do you mean by a serial gapper? You've got that labeled right there.
well, the stocks have personalities, right? And if it does this one time, it's probably going to do it again.
Hmm.
And just like CROX, you saw the other side, right? It gapped up, it gaps up, it gaps up. That's its personality, probably because the CEO and the company is executing and they're
Right.
sandbagging, lowballing guidance, and then raising every quarter. That's the game they play. But somebody's not executing here. Somebody's not managing this company properly. And so I had this thing ready to go yesterday, and we postponed till today, and it did it again
Right.
today. So I put, here we go again. I'm
Yep.
sorry. I've been there. I felt that pain. So if you're long and fasting, man, I feel your pain. I mean, just look at those pink volume bars, man. People are selling this stock. So anyway, that's what I mean by a serial capper. I stole that from David Ryan. I'm a teacher. Teachers steal everything. You know that, right?
Yep.
I created nothing original. I just stole everything. I steal it from Bill O'Neill. I steal it from Mike Webster. I steal it from David Ryan. So yeah, the serial gapper, I think that's pretty funny because it gaps down. And conversely, stocks gap up. That's
Yeah.
just this stock's personality. You know, um, it's too bad. We had a great run in that thing too. It's just, you can't own it. I can't own it.
Yeah. I think the EPS rating, group RS rating, I think that's hiding even one more gap down within the base there. So
Probably.
yeah.
uh,
Do you want to
um,
bring up pins and fiber as well? Because those are some growth stocks I'm sure a lot of people either owned or were interested in, but those also had some pretty heavy gap downs recently.
I'm going to bring up pins here for a minute because it had warning signs before it gapped down. Last week?
Hmm.
I have a formula for holding through earnings, and I think I stole this from Mike Webster too. Is you take the worst daily range, like a 10% or 12%, or if it was down 15% one day,
Hmm.
you take that 15%, its worst day in the last year or a year and a half, whatever, and then you add your stop loss into it, your 5 or 7% stop loss. So if it was Fastly, that 27%, you add the stop loss, which was, 32, 34%. You need that much cushion to hold through earnings
Right.
because it's done that before. It's probably going to do it again. So if you had pins, I put here Hulk smash down 15%. I think that was as big as day,
Yeah.
drawdown in one day. So going into earnings, you add your stop loss of 5 to 7%. You need like a 20 to 22% cushion just to go into earnings and hold. Managing your risk, you know,
Hmm.
risk management. And I don't think it was down 20%, but it was pretty close. So you pretty much gave up all your gain just holding through earnings there. Yeah, earnings is those new data points. That's a real crapshoot.
Yeah.
Um, it's good and bad. We mentioned all the breakouts that are working. Well, there's some that aren't working, right? So that's the formula that I use though for earnings. Um, I don't know. You just got to manage the risk. If you have conviction in a stock and you want to hold it, you still have to manage that risk because anything can happen. You know, I
Absolutely. And
some people that were really,
yeah.
because you look at the numbers here, the growth numbers and everything was great. It's just there was one little metric that Pins was off on that it sold off. But you got to follow the money, the institutions, and these pink bars are telling you they're selling that stock. So, I'm not going to argue with Mr. Market or those big institutions. You know,
Absolutely. It's just kind of building a longer term base under 89.9 right now. Probably sometime in the future, we'll be watching and it'll blast through that to 100 and beyond. But right now, it's just going sideways.
it's funny. All my teachers, not all of them, but most of them at the school, they all use Pinterest for
Yeah.
lesson planning and exchanging recipes. They were all on Pinterest. I go in their classroom and they were on Pinterest. Some were on Facebook, but a lot of them were on Pinterest doing business stuff, and sharing.
Yeah.
And it got me interested in Pinterest, but I don't know. I don't know. They're not. I don't know. The stock has been really hard to trade, and I wouldn't give up on it though. Here at $60, it's probably more of your risk reward is better than at 88, right? I mean, right? I mean, Yeah, it's got tremendous growth. I mean,
We'll
but
see what happens.
yeah,
Can you
it's got to
talk?
fix itself.
Yeah.
It's got some damage to repair there.
Can you talk me through? You've got a label here, failed breakout. That's something you look out for. That's a potential red flag for you.
Yeah, failed breakout.
Yeah.
You know, and gosh, I'm glad you brought that up. Because recently I've been a little concerned with DocuSign, Shop, CrowdStrike. A lot
Zscaler.
of those broke out and they came back to their pivot areas, right? And I wouldn't say it's a cause for alarm because I got great conviction in those stocks, but it's just like a yellow flag. You want to see it break out and move on,
Right.
but the volume just isn't there here in the summertime. You can see the volume is just not there to push those things through to higher prices. But I am holding on to Crowd and DocuSign and those stocks that have had those failed breakouts. Yeah, that's definitely a yellow flag for me. The failed breakout.
Yeah,
Um,
the ideal breakout is something like we saw with AMD, where we see multiple days on higher volume closing near the high of the day. I mean, obviously, we always want that. We don't always get it, but that's the ideal
yeah,
action.
sign me up for that one.
Yep.
Like I say, a second grader can see those volume bars and say, that's a pretty good stock, isn't it?
Right. Right. All right. Are there any more charts that you want to? Yeah, bring up crowd. That's
Yeah,
perfect.
I got a crowd. This is one where I had bought before. This is why, I talk out of both sides of my mouth. I like to hold stocks forever, but if they go below the 50, I sell them. So I don't
Hmm.
hold them forever. I have tremendous conviction in CrowdStrike. They've got all the CANSLIM numbers, right?
Yeah.
If they're going through the 50, I typically sell them. And the reason why is twofold. One, you never know how low they're going to go, right?
Yeah.
Who knows how low they're going to go? And two, I can always buy them back.
Hmm.
Usually I buy them back at higher prices. But on this case, I bought the breakout here and then it ran up nicely. And then what is this, like February? The trouble growth stocks ran into in February. It just sold off through the 50. And, like Webby says, bad things happen under the 50.
Right.
Um, when he uses the Metallica, going to the Metallica hitchhiker, he picked up the hitchhikers and bad things happened, right? But anyway, he's a character. Anyway, I went to visit him down in Austin and I told him that I had bought it back
Hmm.
below the 50, which is kind of a cardinal sin. You got to wait for it to go through, right? Rally through on volume, right? But I love CrowdStrike and I know the fundamentals well and I know the people there. So I'm a little biased there. So I bought it below the 50 and I was having dinner with Mike and I said, Mike, I bought CrowdStrike below the 50. He goes, hey, dude, you can break the rules. Rules are made to be broken. So I said, yeah, I broke my rule. And I've broken it a couple times and bought stocks below and watched him, run right back through those moving averages. But it made a little base here at
Yeah.
227. That was the early entry point. I know
Right.
some people on Twitter were saying, no, it's 226, it's 228, it's 227. I don't really care. I'm not that detailed. It was in that area, so I bought it. Again, I added to it there. They're added 227, yeah. And then it ran up. It went from what 177 to 270,
Hmm.
which is a phenomenal run, right? And
Hmm.
then I got people saying, why isn't this thing going? Why isn't it running? Like Fortnite, since geez, the thing went, 100 points in a couple of months, give it a break. So I think that's what it's doing right now. It's just kind of resting in this zone here and kind of chopping around.
It's
Um,
on lower volume. It's going sideways on
yeah,
lower volume
really,
above the pivot.
really low volume. Look at this down here. I mean,
Hmm.
I think it's really healthy. I think it looks good. I think, 251.28 eventually will be proved to be a buy area and it'll move on to advance to higher prices. But we'll see. We'll see. They have to deliver earnings and sales growth just like any other company, right?
Hmm.
Yeah.
And do you often look for those like kind of bases within the base, like the add-on at 227? That's a really nice constructed pattern, but it's not the standard breakout, which would be
Uh,
through
well,
251.28.
yeah, that's early entry. That's a little more risky entry, right? That was yeah, that was same with AMD. If you want to go back to AMD, I was listening to David Ryan because I had bought AMD, not that one, you dummy. I had bought AMD at the early entry point, like I showed you. I got I got shaken out of there. I bought it early, I thought I was cute. It ran up and then it came down. I got shaken out.
Right.
Bought it back again as it came through. But I was listening to David Ryan. He said he was not interested in buying it till it came back to this 99.23
Mm-hmm.
buy point there, because he wanted it to prove itself. And obviously he was right,
Mm-hmm.
because it did prove itself and ran up another 20%. And I'm sure that's a great trade for him. In a couple of days, you get 20%. That's great. But yeah, it's a little riskier to buy earlier because the stock's not proving itself, right?
Mm-hmm.
It's better to wait. It's safer. It's all risk reward, right? It's risk reward. I mean, you're taking more risk buying it early, and you let it prove itself, and you might pay a little more, but you're eliminating some of that risk, So yeah.
And something I picked up from you just from Twitter is you're very hands off. Let the stock work. Let the stock work for you. And I think that's a valuable lesson. I think we're all guilty of overtrading a little bit and trying to force things. What advice do you kind of have for people to chill out a little bit more and let the stock do its thing and let it go on an uptrend if it's going to go on an uptrend?
Yeah. Wasn't it Darvis who, the closer he got to New York, the worse he did, right?
Right, 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 right.
When he was like on another continent, when he came to New York, his performance suffered. I see everybody, at the grocery store or the golf course, people looking at their stocks, it's like, oh, Nvidia's up, 3% today. It's like, oh, well, okay. If they're going to be quality stocks and deliver, earnings growth and sales growth quarter after quarter, year after year, you need to let them wiggle around a little bit. I just told you that I sell up to 50, right? So once again, I'm being a hypocrite, talking out of both sides of my mouth because I don't like stocks below the 50. But yeah, you got to let them wiggle around a little bit. You can't be watching the screen 24/7, especially now in the summer. I
Yeah.
mean, they're on vacation. There's low volume. There's not a lot of action going on. There's no stock just completely running away from things except for Moderna and
Yeah.
BioNTech.
Yeah. Yeah.
But it's very little action that way. So yeah, I think you can do yourself a disservice. I think you overtrade when you're looking at the screens all day. I think you're more partial to maybe overtrading, being more emotional. If you're seeing your stock, trading down a little bit, you're going to sell it, and then it goes back up, and yeah. So yeah, just chill out, relax, let the thing work. If you've done the homework and you've bought in a quality stock at a responsible buy point, a
Hmm.
responsible area, then it should work for you. And like I say, if it goes down 5%, well, just sell. It's not working for you, but yeah, just you got to let them work. I mean, I think from 2020, we got a little spoiled, Richard, um, because you could buy Datadog or Fastly out of position and it goes up 300%. And I think we lost a lot of discipline and patience, and some of our strategies, suffered because of that. And now we expect too much from the stocks. You got to let them work. I mean, if you got well, I just looked at what is it, Fortinet, CrowdStrike, and Zscaler. They're all up between 80 and 120% in the last year. That's phenomenal. Cybersecurity is one of my themes. I believe in themes. Trading into themes, buying themes, and over time, your e-commerce, your AI, your fintech, genomics, Internet of Things, gaming, whatever your theme is, I think that helps give you conviction. And if you buy a stock and that theme plays out over time, your stock's not going to go up every day or every week. You gotta allow it to wiggle around a little bit, and you can't force it. The stock's going to go up and when it wants to, not when you want it to.
And on the weekends, as well as looking for these stocks, what are you doing to kind of judge the current market conditions?
See, I use the Nasdaq. I know a lot of people like IWM or the SPY. I like the Nasdaq because that's where the growth stocks are.
Hmm.
Um, and right now, I think it's about 3% above
The
3%
50.
above its 50, right?
Yep.
Yeah, it's 3% above its 50, and it's there's my fear of greed, and it's I want to say 1% or 1.2% above its 21 EMA, right? So I use the 21 EMA, and if it's above there, then it's pretty healthy, right?
Right.
If it goes below the 50, it's not the end of the world. But you can see since we had this, we had a huge run, then we had this consolidation period,
Right.
right? Came back down here.
Nice retest.
Yeah, yeah, exactly. Nice little consolidation, this little area here. Now we're moving back up. So I'm more bullish than I think most people. I don't have one foot out the door. I'm fully invested for myself, which is about 70 to 80%, because I'm pretty bullish on the market right now. And I think it's going to get better as we go along. And if it pulls back a little bit, so what? I mean, it's supposed to pull back, right? It's
Right.
healthy to pull back. They used to call that backing and filling, right? So yeah, I'm pretty bullish. I think we're just kind of starting up this next leg here towards our October, November, December rally here. So like I said, we're going to make some big money here. You're about to be ready for it, right?
Oh yeah, for sure.
Right.
All right. Are there any more stocks you wanted to go through and talk through their charts and why you like them in general?
Yeah. Did we go through DocuSign?
I don't think we brought up the chart, so that'd be a good one to look at because this has been super powerful since that earnings gap up within the base.
And if you look at take a step back, like Arusha and Mike like to say, look at that consolidation, right? 43 weeks, 38% depth in the base. I mean, that's a long consolidation period. Of course, it had a huge run,
Mm-hmm.
and then, but that's a year of consolidating, and now it's just starting to poke above and push above that pivot area, right? I mean, you really can't even see it on the daily. But this to me is still actionable. I mean, I think if you like DocuSign, you want to buy it. Yeah, it just pulled back to the 21 EMA where it got support there. That's another one of my high conviction stocks that I own. And I think it has great, just talking to people in real estate and people who do professional contracts, this thing has a lot of leg to go, I think, a lot of runway. And it's got the growth numbers that you look for, And, I think over time, this is going to do well in your portfolio.
For sure. This is one I traded a few times last year, and it actually taught me a pretty good lesson. So I actually bought this pretty right coming out of that kind of pseudo cup and handle. It was one of the stocks I bought off the correction, but I got shaken out. It was holding on a closing basis. You've got the short-term pink line, the 10 EMA, the 21 EMA, which we both use. I got shaken out and it just didn't get back in, and it went up another 60%. Then I traded one more time, got a nice gain out of it, but I didn't capture its full potential last year for sure.
Getting shaken out is okay, right?
Yeah.
It's okay. Yeah, yeah. You get shaken out.
I still got a nice gain out of it, but
Yeah.
I tweaked my rules a little bit, and hopefully the next time I'll get back in if it does shake me out. So
I don't. It doesn't bother me if I sell for a loss. I don't like to do it, but that's just part of the game, right?
yeah.
Or tuition. You got to pay tuition. There was another one. This one, the guy Dustin, the CEO, bought $42 million with his own money, right?
Yep.
The thing took off. So my wife wanted to buy a stock, right? And she wanted to buy, AMD because everybody's talking about AMD. I'm like, no, don't buy AMD. The thing's at $120. It had its day, So I brought up this stock, and so we bought this stock for her. So I pray this thing does well. Otherwise, I'm going to hear about it for a long time. Wish me luck on this one. Dustin Moskowitz, yeah, he put $42 million of his own money in it, so he must know something.
Mm-hmm.
Earnings are September 1st, so it's it's still relatively. I would still consider this an IPO, right? Less than a year old. Yeah, I mean,
no earnings yet, but the sales and margins are pretty good.
Yeah, he knows something. Yeah, it just broke out of this base and ran up, so it'll probably probably base here before earnings, or so I don't know. It's a good company, so I bought it for my wife. I hope it does well.
Yep.
So I talked to people, and I asked them like, what's your goals, what's your objectives, and everybody says, well, I want to double my money in a year.
Yeah.
Right. I said, okay, welcome to the club. So do I. So you have to take a lot of risks to do that, You have to buy something really risky, but they don't like it when the stock goes down, It's like,
Right.
that's part of the game, if you want to buy a slow pokey stock like Bristol Myers, you can, collect your 3% dividend and, be safe that way. But yeah, you have to take some risk in this game. Uh, I took some risk for my wife. I hope it works out for her. That's a nice chart. It's a nice uptrend, and it's a good company. And the CEO is a former Facebook guy, right? I think it's going to do pretty well.
Yeah, it's respecting the 21 EMA, the green line there, pretty well. And do you mind talking a little bit about why you chose those moving averages? I always get questions about that.
I just woke up one morning and decided it would be the 10 EMA. And, exponential for a little more growthy type names.
Yeah, it's faster moving. Yeah.
Yeah, I know people talk about the 50 as a remedial one, but that remedial 50 simple moving average works. I mean, I don't know.
Yeah.
Algos are programmed to it, or the big fund manager on vacation, they just have their programs buy it at a certain point, or I don't know. I'm not that smart. I just know that it works for me, so that's why I have the 50 simple. And the 21, a lot of those growth stocks, they respect that 21. If they're taking an uptrend, you saw Fortinet. That was one that respected that moving average for a long time in its uptrend. Yeah, so those are the three that I use. If you use the 80 EMA or the 9 or the 10 SMA, it doesn't matter.
It's going to show pretty much the same thing. Yeah.
It's pretty much the same with the stock market. Whatever works for you, do it.
Yeah.
If it's working for you, do it. If it's not working, try something different. But this is one that I had on the breakout Zim. And I don't know. I was listening to Ed Carson. He's my guy on IBD, him and Dave and Alyssa. And they had this thing at like 25 when it broke out. I went, hey, that looks pretty good out of an IPO base, right? It IPO'd and went straight up, based, and then moved, right? And so I bought that breakout there. I was luckier on 25, 26, and it ran pretty good for a long time. But then it just had this little bearish engulfing candle at the end of June, whatever. And so it's forming a base. I mean, there's nothing wrong with it. I know it's supposed to earn like $20, this year, have some big fat dividend for its shareholders. But I think in the shipping industry, it's pretty hard to get a high multiple.
Yeah.
Because of their past behavior, so people don't trust those stocks.
So how did you handle this one? Are you still in this?
I bought it here and I rode it all the way up, and then there was a lot of noise here around that high, if you know what I mean.
Yeah,
and,
failed breakout. Yeah.
Yeah, and then I just tried to hang on around 40. I think the low was because I had a cushion in it, so I wanted to hang on as long as I could. I think that 39.80 was the low. It was below the 50, and it hung around for a couple of days. But then when it crashed there, I had to sell it, probably at the low of the day. Always sell at the low.
It's still a nice trade, though.
Yeah, it was a nice trade, and it was thanks to the crew at IBD Live. So they alerted me to that one, and I'm still watching it because I'm still watching the oil and the shipping stocks because they have been leaders, and even though that's a lagging indicator, there's probably still some growth there, and they might just base and come out. And I'm thinking maybe in the fall, maybe software and cloud and the tech and the growth and the value and all of them can go up at the same time. Can we have that?
Yeah, sounds like a plan to me, for sure.
Why not? I mean, let's have a real rally here. It's been real spotty this year. So
perfect. And Marty, you were about to tell a story before my camera shut off.
I've known a lot of people living in Silicon Valley. I saw people make a lot of money in a very short time. In the 2000s, the 99, the go-go 99 party like it's 1999. A lot of stocks, a lot of companies were going public. You just had a .com after your name. You go public and you make millions, right? And I've seen young kids have tens of millions of dollars in their pockets at the age of 25, and they destroy themselves with drugs, alcohol, and carrying on. And actually, some in jail, some of them died. Some have families who are successful, but a lot of money at a young age that can ruin you. You always hear those stories about the athletes. They have a lot of money, and then they're 35 years old and they're broke. They can't get another contract. So yeah, a lot of money at an early age is a dangerous thing. But the stock market will change your life if you allow it to, and everybody has to have a plan. You have to know your style. You have to know yourself. You have to write it down. What do you want? And when people come to me, I ask, what's your time frame? Is it, 5 years? If you're my age, you don't have a lot of time. If you're your age, you got a long time, to make a lot of money in the stock market. So time is definitely to your advantage. But I have a story about a person that's close to me that I knew. She was, kind of a product of the 60s. The 60s was a turbulent time. And she moved out of the house probably when she was like 16 or 17 and got jobs at like McDonald's or A&W Root Beer. They used to have they used to rollerblade out to you.
Yep. Yep.
And so she had a lot of crappy jobs like that. Crappy is not, that's not cursing, is it?
No, no, all good. All good.
She had a lot of menial jobs like that. I shouldn't say that because people work at McDonald's and A&W, and God bless you, we need people to do that. But she had those types of jobs, and then she got lucky. About 18 or 19 years old, she got a job with the telephone company, Ma Bell, right? And she worked there as an operator. And back in the day, in the 60s, you had the rotary phone and you had an operator plug in your calls. You had to wait a minute till they plugged them in. And sometimes they would unplug you and they just drop your call. But that doesn't happen these days too much anymore unless you have AT&T. But anyway, she worked at AT&T and she was she had the entry level position of an operator. She sat at the desk. Happy, she was happy she had the job. She got married, had children, and got divorced and was a single mom. So she was raising 2 kids, single mom. But AT&T, or back then it was Ma Bell, they had this program where you could match, I think 6% of stock. So every month, every quarter, you match. So she made the hardship. She had great work ethic, and she knew to buy that stock. So she bought AT&T religiously every quarter, every month, whenever they offered it. She figured it was free money. It is. If you work at a company and your company's offering that, take it.
Yeah.
Max it out. That's the best thing you can do. It's free money. They're giving it to you. So she did that for 45 years, and her kids grew up, and she retired in 2010, I want to say, right after the the financial crash. She felt comfortable with her nest egg. She had a place in California, and she retired at 2010. Put all of her AT&T stock. She sold it all, and she put it in Apple, which sounds crazy, right? Talk about concentrating, right? She just had faith in Apple. She used Apple products. She had the Apple phone, the computer, the iPad. She had the Apple products. So she put all her money in Apple, and I told her she was crazy, but buy some Google or something else. But anyway, she put all her money in Apple, and between 2010 2011, she made more money in the stock market than she ever made working at AT&T. I think she took about $600,000 or $700,000 and turned it into about $8 million, right?
Wow.
So now, she's got a comfortable life. I think she's about 70 years old, travels to Italy, and just, she has a great life, thanks to the stock market. She made more money in that 10 years than she did working for 45 years, 10 times more money, so the stock market changed her life, and God bless her, man. That's a great story. And yeah, so the stock market can do that for you too. Just never give up. Your next great trade is just right around the corner.
Absolutely.
And I firmly believe that. There's so many great companies that are coming to market now, and you just got to latch on to them. Read the book, right? Read the book. Follow the rules. You can find one. If one blows up on you, so what? Don't get down. Don't get discouraged. Keep your head up. Keep plugging away. You'll find that great one. It's inevitable. You're going to find that next stock. I mean, if you follow this book, right, Richard?
Yeah.
I mean, if you get these numbers here and you're getting 112% triple digit sales and earnings growth, those stocks are going to pay off you eventually. They're not all going to bomb.
Yeah, I think last year was really the proof that all the proof I needed. I mean, how many great CANSLIM stocks had incredible runs last year? Too many to name: Tesla, Zoom, Peloton, Fiverr, all those names. If you just caught one, you had a great year. So
yeah, last year was a phenomenal year. I did well last year. So every time we have a pandemic, I do well.
there you go.
I'm going to kill it in the next 100 years. Yeah, the 100-year pandemic was good for the stock market. But like I say, we're digesting those gains, right? I think we digested those gains, and I think we're looking towards 2022 in a better stock market. But yeah, that was a crazy year. Changed the way we live, right? Like everybody's inside, and we're using Zoom now, which is another one. We didn't even go through Zoom, did we?
Yeah, let's do it.
Almost stock. I mean, you really go to the weekly. I heard about this stock was through Andre Iguodala, the Warriors forward.
Mm-hmm.
Living in California at the time, I was listening to him interview, and he just said, "Yeah, I just invested in Zoom, and I'd never heard of Zoom, so I had to research it." And then, yeah, I got in on that one early, and then messed up the trade, of course. But you could see it had this huge run, and now it's just kind of forming a base above its moving averages here. I would not give up on this company.
Yeah.
Great CEO, great leadership. The guy's brilliant. He's got a fantastic balance sheet. I mean, if you look at their free cash flow, 42% return on equity. I mean, I know the growth is going to slow. I mean, they're not going to grow at 560% earnings every quarter, but it's still a great company. I wouldn't give up on that one. I know Kathy Wood's buying it, so you just got to buy what Kathy Wood buys and you'll be great, right?
Yeah, for sure. Yeah, well, it's trying here. You've got a little bit of a base within a base around 400, so with some nice volume.
Me yesterday on Twitter sent me a DM. It's like, is that a cup with handle pattern? Is that what cup with handle? I said, I don't know what you want to call it. I don't think it's a cup with handle. I think it has a lot of work to do.
Yeah, it does.
But I wouldn't take my eyes off it. Now that it's above the moving averages, I think a lot of more interest is in this stock. It's just acting a little better. But yeah, absolutely. So that's when those numbers will give you conviction. I mean, we know it's not going to grow, but it's going to grow into its valuation at some point. This stock is going to be a buy. So it's deep on my watch list. Not anything I'll buy anytime soon, but yeah, no, it's a great company. That's what the COVID did to us, though, right? I mean, it has adapt, and we use different things now, and people don't want to go back to work.
Yep.
So yeah, it's cool. Oh, I want to say one thing. I was looking at your your criteria for us having a conversation, and one of the things that I think to include is like, you're proud. What are you proud of?
Yeah, that'd be great.
As what am I proud of? Because I'm proud, of things that I've accomplished in my life. Just that, not for myself, but for others. Because my 4 pillars in life that I learned from my dad is that you earn money, you save money, you invest money, because you have to invest, right, to keep up with inflation. And then in the end, when you've done well, or even when you're not doing well, you donate back to charity. And it doesn't have to be financially. You can volunteer at the old folks home down the street. They love to see people. Bring them a puzzle or a coloring book. You'd be surprised at how people their eyes light up when they see people who actually take an interest in them. So those are my 4 pillars for life. Earning, you got to get a job. Some job, doesn't matter what job. You could go work at McDonald's or A&W, or be a board operator at AT&T and be a millionaire. But you got to save. Doesn't matter how much you make, right? If you blow it all and get in debt, it doesn't matter how much you make. You can make $1 million and spend $1 million in one. You got nothing, right?
Right.
So you got to save, and then you have to invest wisely. And that's where Bill O'Neill and this book comes in, and all the people, get on Twitter and follow people. There's some really smart people on Twitter, and who I steal stuff from them all the time. I enjoy Twitter, by the way. I know a lot of people,
I can tell.
I laugh every day, and I have fun with it. I don't know, people say, oh, people are just bragging on Twitter, and there's a lot of people BSing, but you got to look beyond that. I really enjoy Twitter, and just engaging with people, and people with sense of humor. I like to laugh, so that's what I like to use Twitter for. Yeah.
And there's a lot of great traders sharing ideas there too. There's a lot of value in Twitter, I feel.
Yeah, there's some fantastic resources. Who's that? Duckman was on there, and Webby took him away. But his buddy Laguna Madre, Eddie's on there. I think he went Mark Cook. He's one of my boys, and Chris. There's Karuna and Ben. There's just a lot of them. There's a lot of great traders. Elaine and Jessica, you mentioned Joe Trader. There's a lot of traders that I converse with daily and they help me out. Lauren, um, yeah, just to get a different idea and different eyeballs on things, right? Because you
Hmm.
can get kind of locked in. I found myself with my site getting locked into certain stocks, right?
Yeah.
Like all heavy software, heavy semiconductors. Like, you got to look back and branch out a little bit. I'm having success with this type of stock, so it's good to look back and open your eyes and yeah, take a look at what other people are doing. So no, I just wanted to say that that a proud moment. I'm proud for not only living the four pillars that my dad taught me, but at my school, it's kind of, I wouldn't say elite. Yeah, it's an elite Catholic school. Okay, you pay a lot of money for it, right? Not
Hmm.
everybody can afford it. And the school next to it is Mitty High School, Archbishop Mitty in San Jose. It's a phenomenal high school. But I came from there and I came to work at Queen of Apostles School was my school, and the priest there asked me to teach. And my first contract was about $20,000, trying to live in Silicon Valley on $20,000 back in the day. But I eventually worked my way up as a teacher to be a principal. And then my mentor, Father Jim, the never give up guy, he passed away in 2010. And
Hmm.
so the Friends of Father Jim, we started a scholarship program
Awesome.
for people who are less fortunate that can't afford, the elite Catholic school or whatever. So I had gone around and raised a bunch of money. I worked my tail off doing social events and fundraisers and nights and weekends and stuff. And we raised, a lot of money. And we took the money, and what I did, and this is a lesson for me
Hmm.
that that I had learned, that when I raised the money, I gathered a committee of people, Richard, like 8 people to like kind of like make bylaws, and structure this thing. And there was too many chefs in the kitchen. They wanted to have, each stock that we buy have a 3% yield, and we'll use the yield to pay for the education of those less
Right.
fortunate. And so I did that for a couple of years. This isn't working. So I blew up the bylaws. I thanked everybody for their time, their dedication, but I had to run the thing myself. So I immediately started buying Apple after, I heard the story from my friend, Apple and Amazon, and it really, those go-go stocks put a charge into our fund. And then
Awesome.
we raised a bunch of money, and then there's a lot of families who are at the school that are there because of our fundraising efforts, and they would never, never, never be able to go to a school like that. And so I went back to Silicon Valley last week, and I saw some of those families, and they really thanked me. Their kids
Oh,
had
that's awesome.
graduated. Yeah, yeah. So it was really a rewarding feeling that I'd be able to help some people, and it enhances all the community, because
Yeah.
you don't get just one demographic. You get more of a well-rounded education. Socioeconomic, and so anyway, that's one thing that I'm proud of, so I had to mention that. I had another story. Do you got a minute?
Yeah. Go for it.
Well, we talked about patience, right? And Kathy Donnelly, bless her heart, she talks about patience all the time. That's why I love listening to her speak, because she waits for her spot. And
Hmm.
when I was a kid, my uncle Earl, we had a place up in Woodfords, which is about 20 miles south of Tahoe. He would take me fishing in the morning, and we'd stay there all day long, right? And he fished and he fished. He would drink beer, and I would just skip rocks, in the river. It was the West Fork Carson River. We'd go fishing, and they would. This is back in the '60s, right? They would come with this like dump truck of fish
Hmm.
and just dump all these fish into the river, right? I mean, a ton of trout, and they do it all the time, like once every couple of weeks, right?
Hmm.
And my uncle Earl, he knew what they were feeding the fish at the fish farm, right? So,
Yeah.
so he bought that for me. I was like 9 or 10 years old, right? And he'd put it on my little hook, and I'd throw it in the water, and the fish would be jumping out of the water at it, right? So it was easy for me to catch fish. And I would catch like 10 or 12, and I'd throw them back. He never would let me keep them. But it was really exciting catching the fish, right?
Yeah.
And I would get bored and just skip rocks across and be a kid, right? Eat dirt or whatever kids do, right? And he would sit there all day, and not in the river, but they have these pools along the river where it's kind of like it's not as, the rapids aren't running as fast, right? It's
Right.
real calm. And he would sit on a rock and he would fish all day. And I didn't know what he was doing. I just thought he was sitting on a rock drinking beer, right? But there was this one large fish. And I knew this after he caught it, but it was getting late one afternoon, and I was saying, you know, Uncle Earl, let's go home. It's getting dark, you know, and I'm hungry and it's getting dark. I want to go home. And he said, no, I got to catch this fish, right? He's super patient. And right before we left, he snagged that fish and he reeled it up. It was the biggest trout I ever saw for a stream fish, you know.
Mm-hmm.
It was a huge trout, and it taught me a lesson. You're like, that guy was patient. He waited all day for his fish, and he finally got his fish. So it's the same way in the stock market. You know, you don't have to go chase the shiny objects. Just wait for your spot. It'll come, and you'll do a lot better that way than chasing stock. So that's my Uncle Earl story. God bless him. He's not with us anymore, but he taught me to fish with hooks.
Perfect. Marty, thank you so much for your time and sharing your process and some awesome stories as well. Really showing the power and the opportunity available in the stock market. That's always something good to remember. I always like to ask one last question. What kind of advice do you have for new traders just getting started with this to accelerate their learning curves?
One, never give up. If I can do it, anybody can do it, right? Find what works for you. Find your style. If things go against you, you know, stick with it. You got to stick with it. And that's how you learn. I think you learn more by failing than you do by succeeding. Because failure, it really hurts. You know, it burns, right? And it's just like burning your finger on the stove, right? If you buy a stock out of position, you get burned, you're not going to do that again, right?
Right.
Because it stings, right? So if you do that, don't do it again. And so if you start eliminating those mistakes, then you start refining your process as a trader, right? And your strategies, and you refine your strategies, or you find your screening strategies and stocks to look at. And the more you look at them, the more you look at the charts, look at as many charts as you can, you'll be able to see, you know, right away, you train your eye, you'll be able to see the stocks that you want to buy with your style, the earnings, the sales, the chart pattern, and you'll be able to identify those if you stay with it. I know it's very tough at first. You know, it's hard for me to remember back when I first started, but I made a ton of mistakes and it was frustrating and I lost money. And that's just part of the process. That's part of the tuition.
Well, Marty, I want to thank you once again for coming on and giving us your time and sharing your process. And I'll have the links down below to your Twitter and also your website. Is there any other place that people can reach out to you if they've got any questions?
You know, I'm pretty engaged on Twitter. That's a great place to get a hold of me. Sign up for the website, mcstockcharts.com. It's free 14 days. You can come and see, you know, my thesis and what we're doing there with our heat list and our watch list and IPO list. I have IPOs daily. And then on the weekends, I do a pretty extensive historical data and, you know, give you some new ideas to think about for the coming week. So yeah, it's been pretty good. It's been pretty fun. It keeps me engaged. I've caught myself telling people not to do things like, oh yeah, I can't do that, right? I told somebody else, you know, you can't be a hypocrite. So it's helped me be a better trader and holding to my discipline. But anyway, before I go, Richard, I have my golf club here, my driver, and I got my Callaway ball here, and I'm going to challenge Ropel and Cubby Bears. You guys want to come out and play anytime, but do it for charity. I hear Ropes is a 9 handicap, and Cubby says he can destroy him. So I'm not that good, but I like to have fun, and I challenge you. All proceeds go to charity, your favorite charity. So anyway,
I look forward to hearing about that story. I'm sure that'll be fun.
Yeah, the drinks are. Ropel can buy the drinks though, because I don't think I can afford those guys.
Perfect. Well, to everybody watching, thanks for tuning in. If you enjoyed, go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos.